Welcome back. You're watching The Money Show with me, Kavita Thaplia. There are plethora of funds available in the market to invest your hard-earned money, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have on board Amit Kukreja, founder Amit Kukreja Advisory. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Hi Amit, good evening. Welcome to the show. And we have our first viewer also on phone line ready with his question. We have Mr. Venkatesan from Coimbatore. Hello sir, how are you?
Fine.
Thank you so much for sending us your query. Amit can hear your question. So you want to know about passive funds. You already have Axis Nifty Mid Cap 50 Index Fund. You just want an advice on this fund. Have you already bought it?
Actually, I'm having a lot of mid-cap mutual funds.
Can you please repeat? I just missed that.
Actually, I have a lot of mutual funds.
You have a lot of mutual funds, but your query is on this specific fund, right?
These funds are not performing well. So, passive funds being a trend now, I would like to ask some questions regarding the Axis Nifty 50, Nifty Mid-Cap 50.
Got it.
That's an ETF fund.
So you haven't bought this fund, right?
Are able to put the money in this ETF?
All right. Let me just go to Amit. Amit, I was not able to hear him out properly. If you could, we will talk about the fund later. But then let's just talk about passive funds and passive strategies that an investor might want to have in their portfolio. Internationally, we know that passive funds are really big. In fact, they give you better than active. They give returns better than active funds. But then in India, it's catching up. It's not a situation of either or when it comes to passive and active. One can have a passive core portfolio, and then a satellite portfolio could be into active funds and maybe mid cap or small cap. Basic advantages to have a passive fund in your portfolio, and in what category can one should look at?
So basic advantages of passive funds is that the expense ratios are pretty low, and it mimics the index. So you don't have to do too much of a performance tracking. As long as index is going in a direction, passive fund will also go in that direction. As of now, I see large cap passives doing really well. And I see the alpha which the actively managed large cap funds have been generating, they are diminishing with time. So only time will tell whether they will outperform the index funds. But large cap passives are doing really well. For any other category, I would rather sit back and watch their performance. For example, Mr. Venkatesan has asked about Axis Nifty Mid Cap 50 Index Fund. It's a very small AUM at the moment. In fact, all the mid cap index funds have very, very tiny AUMs at the moment. So I would rather wait for a couple of years and see how the alpha is shaping in terms of the actively managed mid-cap mutual funds over the index funds, and then take a call 2-3 years down the line. But it's a change that's happening globally, and passives are doing really well. But at the same time, in the Indian market, I still see a lot of alpha being generated by the mutual fund managers. So I will not be in a hurry to switch over to the passives for the mid-cap or small cap or even flexi cap category.
Exactly. So over here, I mean, let's also just focus on a large cap category, maybe, you know, where a fund manager has fewer options to include the kind of stocks that might generate alpha as compared to the universe a fund manager might have in a mid cap or a small cap category. Talking about passive strategies, even though it's very cost effective, if you go for a passive strategy, you definitely cannot compare the return to a mid cap or a small cap. Okay. But is it okay if you have a large cap passive fund, and for mid cap and small cap, maybe you would want to have an active strategy where the expertise, you know, is driven by the fund manager, and the alpha generation, which you also highlighted, is there's a lot of scope in India as well for that. Keeping that in mind, one also needs to, if it's a flexi cap specifically and a multi cap specifically, you might also want to restrict your exposure to large cap if you have a passive fund already in that category.
Yeah, absolutely. Investing is layered. You know, you should be building layers based on your comfort and your risk tolerance. So once you have understood the fixed income products, and then you are understanding the variable return fixed income products, your next category to add to your portfolio once you have built the comfort is the large cap. And for large cap, we have been recommending index funds for quite some period, significant period of time. Now, in terms of mid cap, small cap, and flexi cap, I am still, in my opinion, recommending the actively managed mutual funds. So build your layers based on your experience of investing, based on the volatility of the fund that you're adding to your portfolio. Don't jump on straight to a small cap category or jump on straight to a flexi cap category. Build layers of large cap before even building large cap index fund. Try to understand the fixed income investment through a mutual fund route. Build a comfort with that, then add large cap index. Then you can add the actively managed mid cap or multi cap or a flexi cap. Observe the market, observe your behavior for a 3 to 4 year period, and then increase your appetite of high return, high risk, high reward mutual funds in your portfolio.
All right. So to answer Mr. Venkates's question, a no to a passive mid-cap category fund, but if an active fund he might want to include in his portfolio, what fund would you recommend?
So in mid-cap category, we have a very good fund, which is Kotak Emerging Mid-Cap. That's a good fund. At the same time, you have a PGIM mid-cap fund, which is also doing really well. And if he can accommodate a flexi cap or a multi-cap fund, then there is a quant active fund, which has been performing really well. There is a Parag Parikh flexi cap. There is PGIM flexi cap. These 4-5 funds have been doing really well in the last 3 years, and they can be a good addition to one's portfolio.
Thank you so much, Mr. Venkatesan, for sending us your query, and hope you've got your answer. We move on. We have Aditya Bhatt from Bangalore on phone line. Hi, Aditya. Good evening. How are you doing?
Hi. I'm fine. Thanks for having me here.
Thank you so much. You can ask your question.
Yeah. So I have a question actually. I'm looking for a systematic withdrawal plan, basically.
Okay.
So I have invested around 50 lakhs. For 50 lakhs, so what will be the right percentage of SWP we should withdraw?
Okay.
Yeah. So
what is the need currently for an
actually.
SWP? I mean, you want to withdraw money, there has to be some need, or you want to reinvest that money, or what's the purpose of this withdrawal?
Yeah, I want to reinvest that money actually. Yeah.
All right. So, would you also want to know about STP? That's a systematic transfer plan. So you want to reinvest this money where?
Yeah, so basically I want to reinvest in the different avenues. Maybe it can be in the SIP or maybe in the different,
Where is this money parked right now?
So those are basically into different HDFC Balance Advantage Fund.
Okay.
Or it can be the ICICI Debt and Equity Fund and certain small cap and the mid cap funds actually.
50 lakhs you said?
Yeah, 50 lakhs.
All right. Interesting. So, Amit, STP should be the solution for him instead of SWP, or you would want him to do SWP and then later on park his money in one liquid fund and then invest it?
So there is a twist in the question, right? You asked him what funds he has his money invested in. He highlighted all the equity schemes which he's already invested in. So why would I want to pull out the money and move it back into equity, right? So my decision should be, what is the goal for which this 50 lakhs is set aside? How far is that goal? And what is the ideal asset allocation for that particular goal when it comes to setting up a portfolio for that goal, right? So if he's already all 50 in equity, his action is review the performance of those funds and pull out money where funds are not doing well. But if they are already good performing funds, we don't need to do any SWP. See, having a portfolio doesn't mean we have to constantly rejig everything. Inaction is the best action in equity-based portfolio, which means you do nothing and leave the money as is if the schemes are doing really well. But if the scheme is not doing well, then I would suggest to Aditya.
Amit, I will have to stop you because we have Bajaj Finance fourth quarter numbers coming in. Let's just understand the first set of numbers that are released by our colleague Harsh, who's connected with us. Harsh?
Well, yes. So the calculated net interest income has come in just below that 6,300 crore mark. We were expecting it around the 6,200 crore. It's largely in line with what the street was anticipating. We're also seeing operating profit largely in line. Provisioning has come in slightly elevated and profit after tax has come in at 3,160 crore, which is a solid 30% jump on a year-on-year basis. Overall, it looks like a steady set. GNPAs have improved by around 20 bips or so, and that essentially ensures that asset quality continues to improve for Bajaj Finance. The Bajaj Housing Finance book has grown 30% year-on-year. Bajaj Finance on a consolidated level continues to grow at 25% year-on-year. Customer franchise also continues to grow quite healthily. Overall, it looks like a beat, at least at the moment. That's the sense. But we have a couple of analysts here with us to try and break the numbers down. We have Rahul Malani with us, who's the banking analyst at Sharekhan, and we also have Kajal Gandhi, who's part of the research team at ICICI Direct. So Rahul, let me come straight to you. We'll await while Kajal comes through. Talk us through the numbers, at least off the bat. How do they look in your view?
So overall numbers in terms of net income has seen a marginal beat from the consensus by 3%. And on the operating profitability front, it has come in line with the estimates. If we look at the earning PAT number, it has been marginally beat by around 2%. So overall, a good set of numbers from Bajaj Finance. If we look at, they have been maintaining strong margin discipline despite the rising interest rates, which are driving this earning beat. So we continue to expect a strong 25% loan growth over the next 2 years. However, the shift to secured loans due to limited scope in the existing unsecured segments and higher competition and challenges in the unsecured segments may lead to some tempering of the earnings growth. So overall, in terms of decent numbers from the Bajaj Finance.
Right, Rahul. We also have Kajal who's joined us. Hi, Kajal. Good evening. How are you looking at the numbers? In terms of net interest income, there's a healthy expansion. PAT has in fact gone up. There's been some amount of leverage at play as well there. How do you look at it?
So broadly, the numbers look largely in line with estimates, a marginal rise then maybe consensus and ours also, but then it should be seen as largely in line with estimates because with the growth numbers already being there at 25%, we were expecting NII actually marginally higher than the number that has come in. So, and with credit cost or the overall provisions remaining largely in line with previous quarter numbers, looks only steady state and inline numbers.
Let me come straight.
We are yet to see, the breakup of the loan books, which can be slightly interesting, but other than that, it looks steady.
Right. Rahul, let me come straight back to you. So let's talk growth, right? 2 lakh crore balance sheet at the end of FY22, currently at 2.5 lakh crore, 25% growth chugging along. For how long can Bajaj Finance sustain this going forward in your view?
Basically, at present, it looks that for the next 2 years, there will not be certainly any problem to achieve that 25% growth. We cannot assume, we cannot extrapolate that 35 to 45%, 40% growth, which in the earlier decade, which they have been reporting. Because there has been a major shift to all the banks and NBFCs. They are running behind the retail and unsecured segments. So there has been certain competition and challenges in the unsecured segments to grow further, and in the consumer durables, which the Bajaj Finance is a leader. But I think so. 25% around numbers should be comfortable for Bajaj Finance at least for the next 2 years. And as and when the omni-channel strategy is live, so we should see the gradual pickup in the growth.
Right. And Kajal, what would your view on this one be? You also expect a growth of 25%. And what are the other levers for expansion, if I may try and understand from you?
So see, if you look at the composition right now, the mortgage book has almost become a 1/3, which was earlier not there. And now with it becoming a larger duration book, making this growth look 25% looks much more easier as compared to what was there in the past, where it was more of a consumer finance and churn was very fast. So at this stage, I think 25% sustainability does not look too much of an issue, but that is already there in the multiple. So that growth anyways, I think, is the guided one and will likely be done and should not be a big problem, I think, at this stage. And they are also looking at other avenues which they have already pointed out, like on the commercial vehicle or tractor, those kind of segments, some bit of microfinance. And so those segments which are high yielding, they are already going to pursue that. And digital presence also they are expanding. So I think these are the few segments where they will want high margin products to be pushed into and get some business growth from these. But those things are definitely crowded at present too.
Right, and let me stick to that a little bit, and let me come straight to Rahul again. Rahul, fee-based income as well as, them venturing into different products as well, including their, app kickstarting in FY23 itself. What kind of levers does that present for Bajaj Finance, especially from a fee-based income perspective? Because that straight percolates to PAT, right?
So basically, we believe that entering into new business profit pools will enhance the profit pool. And apart from that, the current regulations in terms of the insurance commissions, which they have been, the caps has been removed. So all in all, this should benefit. There is a tailwind related to the core fee income.
Right, and Kajal, if I can switch back to you, of course, Bajaj Finance, you did mention, is one of the pricier NBFCs in the space. What's your view? Is this a good value proposition at this particular price, or do you find something else attractive?
I think the stock has corrected, but still we cannot say value proposition. So we remain positive on the company, but yeah, because too much of, I think, buying interest at these valuations. So we cannot say value proposition, but yeah, from a long-term story perspective, considering this growth continuing, we may not get multiple re-rating, but yeah, growth is what we will get, and according to that, the price appreciation we should expect.
Right. Thank you so much, Kajal and Rahul, for your views. At the moment, I'll shift it straight back to the studio.
All right, so that was all on Bajaj Finance Q4 numbers. Thank you so much, Harsh. And on that note, it's a wrap on the Money Show today. Thank you so much for watching. I'm going to leave you with our WhatsApp number and email ID.